Welcome back, FUD TV. That's right, I'm gonna do the poppy thing now. Every time, it's my thing now. It's Friday. It's a casual day here in crypto land. It's a casual day everywhere. It's why you see me in my casual clothing. I know, jarring. I like to wear this t-shirt. That's why it's a little bit beat up. But unfortunately, I can't wear it very often with the green screen because it's got a lot of green on it. It's a green shirt. It's one of my favorite ones, but it's just very, very green. Anyway, smash like if you're a big fan of John McAfee. Smash like if you do not like John McAfee. Anyway, on with the news. First, we start with the bullish news that Fundstrat's Tom Lee has reported that 54% of institutional investors believe that Bitcoin has in fact bottomed. That means that Bitcoin has reached the lowest levels it's going to reach in this crash and that we can now see upside moving forward. Obviously, if we look at the charts right now, we pretty much see a stable sideways line, which if you compare that to the charts of 2014, 2015, right before we started experiencing dramatic bullish growth in the end of 2015, we saw a tremendous amount of sideways flatlining. So I mentioned this yesterday, but I'll mention it again today. I think it's very important to realize that consolidation around a single price means that the bears are probably running out of steam and that there's going to be a lot less volatility until the bulls can start pushing the price upward. Obviously, it's totally possible that we go down further. I had been predicting for a long time that we'd go down to the $5,000 range and potentially below because the volatility was suggesting that. But right now, it sort of seems like there's a bit of price support here around the mid $6,000 level, that anything below that $6,000 level is going to bounce up pretty quickly. And that obviously, if you have the chance to buy Bitcoin now, which you do, I personally, not financial advice, have started layering in buys because I think that this is the right time to start accumulating. I think that even if we do see a dip from here, it's going to be minor, maybe 10%, maybe a little more than that at its worst. And I think from here on out, we'll start to see some bullish momentum and it won't be crazy, right? It'll be a slow ramp up. There'll be a few little peaks and valleys on its way up, but I think we will start making sustainable growth, whether that starts in the next month, 2 months, quarter, 6 months, whatever it is. I just think that we're seeing enough price support now that we can be excited about the next chapter being upward trajectory instead of downward trajectory. And what I find pretty interesting is that when you look at Google searches, when you look at all the trends and you see when Bitcoin and the cryptocurrency mania really took off, which was really in late November after Thanksgiving of last year, well, Bitcoin was at about $6,000 before November. So it's pretty interesting to see how it's just returned to like the pre-mania phase and how that mania itself was really not indicative of Bitcoin's actual value, but it was just a flood of interest that really sent the entire market really off the scales into sort of uncharted, outlier territory. And now we're back at what people really think, okay, this is the right price for where Bitcoin should be. And it grew there maybe in a sustainable way. And maybe if we continue what was happening throughout 2016 and 17, we can continue that kind of a growth. Anyway, all of this is me just babbling on based upon the idea here that we have a vast majority of institutional investors very much so interested in this product, and retail investors have cooled off somewhat because a lot of them obviously have been burned. The institutional players haven't been burned yet because they haven't really even gotten in yet. And that's because the regulatory frameworks are still evolving, yada, yada, yada. We're expecting the Bitcoin ETFs, which we'll talk about in a couple minutes. But yeah, that's what we're seeing here is institutional investors are getting very bullish. People believe that the bottom has been put in and that slow growth at first, but growth nonetheless can be accomplished going forward. So it's starting to look like the storm has been weathered. To that effect, the brainiacs over at Yale University, or Yale as you squares call it, have also chosen to invest in cryptocurrency. That's right, Yale University, where only dummies and clowns get accepted, has decided to invest their precious funds in a cryptocurrency investment fund. It again shows you that this isn't some kind of wild speculative investment, but rather something that institutions and universities are starting to get behind. And that to me smells very bullish. We also have word that Goldman Sachs-backed Circle is selling cryptocurrency collections, which smells a lot like an index fund. Essentially, they'll have collections for different types of cryptocurrencies. Like for example, if you're interested in payments cryptocurrencies, that might include Bitcoin, Bitcoin Cash, Litecoin, Stellar Lumens, Ripple, etc., etc. These are essentially categories of coins. Now, obviously, cryptocurrencies are going to be phenomenally effective in the payments category. I've always been quite bullish about those that focus on the payment category. And for that reason, I'd probably be a heavy buyer of the payments collection on Circle if I wasn't already, really having the competency to make my own category and make my own weightings. Regardless, this is very interesting, and I think it'll be a very useful tool for new buyers into the market. Again, dumbing down the process of learning all about these cryptocurrencies, why they're different, and just sort of offering invest in the payments, invest in healthcare, invest in data storage, invest in supply chains. Hopefully those will be, those are just my guess on what the categories are going to be. But at any rate, this is a step forward in my humble opinion. And it starts to smell a lot like more traditional sort of baskets of investments that people get into in traditional markets. In very, very similar news, the Abra app now allows you to invest in a crypto index token, which is very much so the same. They're having the Bitwise 10 crypto index token, BIT10, which essentially allows you to invest in 10 large cap cryptocurrencies by buying that token. Again, to me, very similar concept, dumbing down the process of getting involved in a wider spread of cryptocurrencies that gives you access to really the whole market's movement. Interesting stuff. We'll see how this plays out. But again, more products for investors that are new to the space that will help them have positive experiences going forward. I like it. We also have the IMF warning of a new global financial crisis, of course, because GDP debt ratios stand at 52%, up from 36% during the last financial crisis when the Lehman Brothers famously went bankrupt. Essentially, the boil down here is that the next financial crisis is coming. And the question now is whether Bitcoin will become the safe haven if the traditional financial infrastructure fails to perform. If we experience such a catastrophic financial crisis that Bitcoin is the only refuge, that's not going to end well for a lot of people. It might be chaos and anarchy. Obviously, those who survive with their Bitcoin might be kings, but it's certainly a dystopian and weird way to look at the future. At any rate, I do believe that Bitcoin will experience a tremendous amount of growth if this global financial crisis is to kick off. But something to consider, the IMF is sending up a red flag here. So we'll see how this plays out. Let me know in the comments section below. What do you think about an upcoming financial crisis? How would that impact cryptocurrencies? Do you think that something so volatile as cryptocurrencies would be seen as a safe haven if traditional financial infrastructure fails to perform? Let me know in the comments section below. We also have word that Barcelona is making their own cryptocurrency, or let me revise that, has made their own cryptocurrency. Very interesting stuff. It's called the REC, Real Economy Currency, and it's already accepted at hundreds of vendors across the city. Part of the advantage is keeping money within the local Barcelona economy. As you guys probably have heard, Catalonia and Barcelona, as the capital of Catalonia, are very much so resistant to the idea of being part of a larger Spanish economy. They feel like they produce a tremendous amount of goods and services of value, and they would much prefer to be independent from the larger Spanish state. This separatist movement has been going on for decades, really since the Franquismo of earlier the 20th century. I'm not going to do a history lesson here. I actually lived in Barcelona for a bit, so I got plenty of that while I was living out there. But at any rate, I'm just saying this is something I could see being extremely popular, especially in places like Quebec, Barcelona, Catalonia, places that feel like they have their own sort of autonomous part of the world and they don't really want to belong to the larger structures in which they fall. So this is going to be very interesting to see how a city-run cryptocurrency inside of a larger government that they're somewhat resistant to is going to play out. I find this really, really interesting. I'm actually going to Barcelona in the next few days as well, so I might have to get some Rex and go and spend them just for the sake of saying I did it. We also have an October 26th deadline for the SEC to review 9 different ETF applications. Again, not much to say here, but we will keep you abreast of all the details. I'm sure you'll find out about it before even I say anything about it, because this news is going to be the news heard around the world, the crypto universe at least, as soon as one of these ETFs get approved. Most likely the CBOE VanEck SolidX ETF, that's going to be the one most likely to get approved. We shall see. Time will tell. And Alibaba just got approved for a new patent that allows for administrative intervention into a blockchain system. Don't really like the sound of that, but again, who knows, maybe this kind of stuff is how, the sort of larger powers that be of the corporate world really want to interface with blockchain. They don't want pure blockchain. They want blockchain that can be, I guess, intervened upon. We shall see. At any rate, the biggest companies in the world, specifically the biggest companies in China, Alibaba, Baidu, and Tencent, are very fixated on getting into the blockchain game and using it for their benefit. We'll see how this story plays out. Again, more bullishness, but again, this is kind of starting to creep into the idea of when you have an idea and it's pure and great, and then these big companies take over and really spin it in a new direction. We'll see if administrative intervention is something that's good or bad for blockchain in the long term. It's a Friday. It's a beautiful day here in Los Angeles where I am right now. I hope you guys enjoyed the memes. I hope you guys are enjoying your Fridays and your weekends. Let me know if you enjoyed today's episode. Throw me a comment in the comment section below. Of course, if you're not subscribed, I encourage you, hit that sub button, click that little bell notification. That way you're made aware whenever I put out new content. I'm Elio Trades. You're watching FUD TV, and I'll see you very soon on the next episode.